I'm going to bring it back to one of the points you were touching on there, which is commodities. And it has been a great run for commodities, which WAM Leaders has participated in. I'm keen to know what you think the next opportunities within that sector is. Like, where does it head from here? We have record high iron ore prices. How are you playing the space?
Iron ore is probably where we've changed our view, and I think if we spoke this time last year, we were of the opinion that China was the first in and they'll be the first out, and the way they were going to lead us out was by stimulus. As that stimulus and credit starts to roll off, we think the iron ore price is somewhat unsustainably high right now. That's not to say demand won't remain robust for this year, but as we've seen, there's some certain measures that the Chinese governments are trying to enact to reduce those costs, the cost of iron ore. So that will take 2 to 3 years to fully play out. But where we are now, we've seen the cyclical restocking, and we're probably going to start to see that unwind over the next 2 to 3 months. And we think iron ore should be under a little bit of pressure on a short-term basis, and costs should start to creep back in from that perspective. We then switched and we said we went from iron ore into more of the base metals, copper and nickels, where we've always spoke that we've been positive. They've had a really quick re-rating, particularly stocks on the back of what people have been calling the super cycle, which we probably have a slight difference of view on that one. But we still think there are pockets of opportunity, and those pockets of opportunity lie in stocks like South 32, where they have some forgotten commodities like alumina and aluminium and manganese, and they've got their own self-help from a capital management perspective. We still see pockets of opportunities in stocks like South 32.
Well, John, the oil sector is one space that you've been constructive on in the past. Are you still positive on the outlook for oil, and what are some of the ways that you're playing that sector?
Yeah, we've been astonished with how the Australian oil sector in particular has underperformed its global peers. So stocks like Oil Search, Santos in particular have lagged some of their global peers. So from that perspective, we think there's still a catch-up trade there from that perspective. But if we take a step back and consider oil and a lot of the focus right now on clean energy, we think the reality versus the practicality, there's a timing mismatch, and it's right for all governments globally to start focusing on clean energy going forward. But I think the timing mismatch is significant. So I think for the short term, oil and LNG are going to be are still going to be predominant sources of energy globally. So from that perspective, if you kind of look at the capex budgets of a lot of corporates, there's going to be a reluctance. There's certainly going to be a reluctance to invest going forward. So from that perspective, we think a lot of the incumbents are going to be very well positioned to capitalise on any short-term weakness or lack of focus on those sectors. So Oil Search in particular is a stock that we think has plenty of runway to go, and from that perspective, we're happy to stand by that one.